costs. This was even though GSEC yields have from March gone up by almost 12 basis points. Despite that, we saw this reduction. This is largely on the back of our incremental credit ratings and an upgrade to a AAA rating that we received last year. So we continue to be very optimistic about...
Okay, I'm so sorry to just come in over there. Mr. Vishal Sikka also speaking. Let's hear out the Infosys trajectory.
A result of a deep client focus that we have brought. Given the organizational realignment that we made in delivery, in sales, in consulting, and really in all aspects of the company, we've been working hard to rethink our customers' experience, to redesign the way that we engage with our clients, the way we write proposals, and that has resulted in the great success that we have seen in the large deals and in the growth in our top accounts. This quarter also saw the results of our deep operational focus, as well as a widespread adoption of innovation and of new technologies that is starting to show results now, both innovation at the grassroots level as well as the breakthrough innovation that we have been working on. And I feel good about these results giving us good momentum as we go into the rest of the year. We are confident in our ability to achieve our guidance of 10 to 12% in constant currency. And we are still early in our journey towards becoming a next generation services company, as I have laid out. However, this quarter gives us something to smile about and good reason to be confident. Thank you.
We'll open the floor for questions now.
Vishal, a quick clarification. In the analyst con call, you said that the current revenue run rate has been 52,000 since the last couple of quarters. The 80,000 target is across the next 5 to 10 years, if I'm correct?
Yeah, our aspiration is to get revenue per employee to, where are you?
Here.
Oh, here. See, this is the... Somebody asked me about digital. This is digital. $80,000 is our aspiration to get to by 2020.
By 2020.
And we want to get there through a combination of automation and better productivity and the use of more software and more services, more technology as we go. We did see a decline towards that because of the pressure that we see from revenue productivity per employee, and we are working on massive adoption of automation as a way to help stem that, as well as the improvement in our operational efficiency and so forth.
So the current figure stands at 52,000, correct?
The current figure is around 51.7, Rajiv, right?
51,700.
Okay. And has the visibility in terms of revenue per employee gone up over the last couple of quarters? And also in terms of going ahead, is that likely to increase gradually?
Our expectation and our plan and our intent is to have it increase. We don't yet see in a substantive way, but the first signs of that have already become visible. For example, the Infosys sales team sold 15 Panaya deals in the last quarter, and that is a result of the way the Panaya deals work is we replace in upgrade projects, for example, or even in testing, we replace the people-only projects with people plus software. And the software comes at a higher margin, and you reduce the number of people. So even though if the cost of the project goes down and you become more competitive with the client, with regard to the client's pricing expectation, we increase both our margin and our revenue per employee. So this is the formula that we want to repeat over and over again across the service lines. Another great example of this is the work that we have on the Infosys automation platform in bringing automation to our ongoing projects in infrastructure management. And we saw a tremendous growth in infrastructure management in the last quarter of more than 7% quarter on quarter. And in infrastructure management, we have seen when we rolled out the IAP to the first 10 clients, productivity improvements up to 37%, and people, we managed to completely automate the work being done by 17% of the people using this example. So we see that that will help us improve the revenue productivity per employee.
Hi, Dr. Shikhar, this is Bibhu from Business Standard. This revenue growth of this is last 15 quarters high, as you mentioned, volume growth last 19 quarters high. I'm just wondering about your margin profile as well as profit, net profit, both are sequentially under pressure. Is it because of the kind of investment you are making in the digital and other segments because of that, and because you, as a part of your Vision 2020, you have set an ambitious target. So, do you think at this pace your margin profile as well as the profitability part will inch closer to that? That's.
Maybe I start and then Rajiv, you can add as you see it. We have three dimensions to the 2020 aspiration that I have laid out. There's $20 billion, 30% and of 30% margin, and $80,000 revenue per employee. I actually believe, my sense is that given the adoption of software and IP-led services in our work, the $80,000 is all three are achievable, but I think $80,000 is something that we'll get to quite easily. I think the 30% margin will be a more difficult thing to adopt. That is the sense that I have right now. With time, this can change, obviously, and of course, the revenue growth is a result of these other two measures. So you know, I feel like, given where we are headed with the long-term moves that we are making, this is a goal that is feasible. It is certainly desirable and viable. So we are marching down that path towards that. But yes, at a high level, I can tell you that I feel confident that we'll get to 30% margin over that kind of a time horizon, as well as a higher revenue per employee.
Thank you, sir. Just one more addition to that. Just going through your revenues by project type, it seems your time and material contracts revenue share seems to have gone up at the cost of fixed price, because we are talking about the kind of next generation services where the project type will be different, maybe more tuned towards fixed price, whereas here we are just seeing the contrast. What is the reason? Is it temporary phenomenon?
It is split of revenue between time and material and fixed price would vary on a quarter-to-quarter basis, and you know, if you look at it over a period of time, our fixed price have actually gone up from 40 to about 42 to 45%. It is also a mix of revenues, a mix of client projects that you're delivering. Not so much that you should look into it at a quarter-to-quarter basis, but yes, what is happening is the clients are moving more towards managed services, towards they want more predictability into the cost that they are committing to different players. So you would see slowly the fixed price compared with revenues going up, but I think there's not much that you should read on a quarter-to-quarter basis. On the earlier question of margin, I think it's very important to understand that you know, we have given a margin band and we feel very comfortable within that margin band. As Vishal said, we have laid out our aspiration for 2020, and you know, a lot of these things would require investment ahead of time. You cannot expect that the revenue growth and investments would happen in the same quarter. You have to invest ahead of time, and there's always a fine balance that we have to strike between the investments in the current year and how much that will add to the revenue growth and how it will accelerate the revenue growth in subsequent years. So that is the reason why, you know, our first priority is to get the revenue growth to be able to reach the industry growth levels and then exceed industry growth levels. And as we start investing into automation, new services, and renewing our existing set of services, and as the revenue productivity starts going up, you will automatically see the margins go up. So if we achieve the $80,000 revenue productivity, revenue per FTE that Vishal has laid out, then 30%, I have no doubt, 30% would happen. But for that, we have to make investments ahead of time. And that is the reason I think it's very important that margins are looked at from a much larger perspective, from a medium and long-term perspective, rather than being looked at from a quarter-to-quarter perspective.
Right. On the margin front, just I was wondering, because part of that maybe because of the wage hike you implemented, and I think in the television interviews I had you saying that visa cost also one of the reasons. So does it mean that you have applied for more number of visas this time, and if it's so, then why?
No, it is not about the number of visas. See, the visa applications happen in April. That's when the window opens. So typically, this is a cost that would be incurred by all IT companies in the first quarter. If you go back and if you recall the earnings call that we had and the press conference that we had in April, we clearly said that the first quarter we expect margins to drop by between 250 to 300 basis points. And that is normally how it has been for almost many years that I can remember. So this is in line with how the expense structure is, how when the expense gets incurred and what the impact on the margins are. So the first quarter would typically see a lower margin. As the year goes by and you see the pyramid helping us keep our costs down, you would see the margins start improving. So that is how normally the IT industry or any IT company P&L would look like over quarters.
You explained that, but still your press release, Mr. Bansal and Mr. Sikka, doesn't give to the reader or to us the reason why in dollar terms that the decline is sequentially and yearly also. And also in rupee terms also it has declined. That is one. And then your net profit and yearly is declined. 1.3 in dollar terms. Your revenue is in dollar terms, and quarterly 4.5, yearly 1.3. You have so many quotations which makes no sense for us at all. This is the financial results. This is financial statement. Why you don't explain to us? What is the reason? Should we ask? Should we beg? How much you attribute to fluctuation, volatility? How much you attribute to whatever other reasons? Non-operational income or hedging, and I'll ask the other question. Thank you.
So press release is meant for many stakeholders, and definitely media is one of them. Completely. I think media is definitely one of them.
But interest in others. It is meant for us. The press release is meant for press.
So. Having said that, anyways, the first quarter operating margins are about 24% as against last year, which was about 25% plus. The reason decline is also because of a lot of mid-year initiatives that we had taken last year when our attrition was very high. So we had taken a lot of employee initiatives in terms of media hikes, promotions, which has built up the cost structure of the company over quarters. So this quarter, if you look at it, we had clearly set the expectation of the market at about 250 basis point drop in margins at the beginning of the quarter. And we have done reasonably well to be able to contain that impact to about 170 basis points because of the operational efficiencies and the cost optimization initiatives that we took during the quarter. Having said that, I think you also have to look at the volatility in the rupee. Though operating margins have been about 24%, the yield has started coming down. The interest rates have fallen, and they are expected to fall further. So you would see the interest income started coming down over the quarters. Also, the exchange gain. Last quarter we had about $23 million of exchange gain. This quarter it's lower. It's a loss of $3 million, primarily because the volatility that you're seeing in the cross currencies. This quarter we have seen rupee depreciate against all major global currencies by about 8% against GBP, 8%, 6% against Euro. So that kind of volatility, I think, does impact the forward covers that we take and the mark-to-market losses that we book.
You are giving 23 million of the gain that you had last quarter, but you are not giving for this quarter the loss because of non-operational.
I did say 3 million loss that we booked on exchange this quarter. It's in the P&L.
3 million. Okay. Yeah, Mr. Sikka, since you are giving these figures, I could not go to Chennai last time when the quarterly was there. These figures, grandiose figures are 2020, you're giving of so many parameters. And then there's a talk about the investment aspect. Is it possible for the company to disclose how much you need to invest to get to that figures? Or that will be selectively not disclosure?
The 2020 aspiration that we have laid out, we want to get there in the normal course of business with our transformation of our workforce and our service lines and bringing more innovation and more automation into what we do. I expect that, so from an M&A perspective, the general guideline, the general aspiration that we have set up is that 1.5 billion of the $20 billion would come from revenues of acquisitions that we make or investments that we have made. So you can extrapolate that into a certain amount of investment that we will make from an M&A perspective. The rest would be just normal course of doing business is how we expect to see that grow. Which means what? Yes. So remaining, if you now separate the 1.5 billion coming from the investment, M&A, etc., inorganic growth, the remaining 18.5 billion, our aspiration is to set that up as 2 billion would come, 10% of the total revenue would come from our new initiatives, which is our products and platforms, Finacle Edge, as well as new kinds of platforms and services that we offer, new complex new applications, AI, things like that. And then the remaining 16.5 would come from the renewal of our existing service lines. And that comes to a cumulative average growth rate of approximately 13.5% over the next 5 years, and we believe that we can achieve that. So that is, having said that, this is not a guidance or an operational plan. This is an aspiration that we have of getting to 20 billion in revenue by 2020 at 30% margin and $80,000 revenue per employee.
Hello, sir. On a consolidated basis, your attrition has gone up to 19.2%. Previously, you used to report last 12 months. So is there a change in the structure there?
No, the attrition has actually improved. For the group, it has improved by 700 basis points, 7%, and for Infosys Limited by more than 9% year over year. We had an absolute loss of roughly 8,550 employees, which is a little bit more than, that means a little bit more number of people left our company than they did in the previous quarter. But of course, our total headcount is also larger and so on. So in terms of the metrics itself, maybe Praveen or Rajiv can explain.
Yeah, we are now looking at quarterly annualized metrics because we believe that's a better metric than last 12 months because the seasonality of the quarter takes into account. So going forward, we'll be talking only about the quarterly analyzed metrics.
Vishal, hi, here, right behind you. Yeah. A couple of questions. Everybody is betting big on digital, and different people, different companies are achieving it in different ways. I mean, Accenture apparently has made 45 acquisitions in the last 3 years, according to a research report. TCS is talking about training 1 lakh employees on digital. What is, your own strategy going to be, and will you, start reporting this as a separate segment going forward? Because some months back there was a report that you get over $700 million from digital. So just take us through that. Thanks.
So, every once in a while, with the growth of technology, new buzzwords form, and digital is this buzzword. If you step back and look at what we do, everything that we do is digital. The last time I looked, nobody is writing software on pieces of paper or on walls or something. We are writing it in digital computers. So in that sense, 100% of our revenue is digital. But the category, the digital itself is somewhat ill-defined. There is no standard kind of a vocabulary around that. So it is difficult to say. When you look at rethinking the experiences of our clients who are in the physical industries like manufacturing or retail or CPG, and where parts of their physical processes, parts of their physical infrastructure are slowly becoming digital, this conversion from atoms to bits, as Nicholas Negroponte talked about in his great book, Being Digital, then yes, there is a tremendous amount of opportunity in bringing software to these new kinds of physical spaces, physical things, and so on. However, it would be interesting if we define that as digital, but then that is not how people define the digital category and so on. So it is, I think it is, so we just don't even fixate on this, what the meaning of the word digital is. Everything that we do is about digital, and we are moving forward on that. But it is true that there are clearly new areas of the industries, various industries that we work on, where physical infrastructure is being replaced by virtual infrastructure, by digital infrastructure. And that is obviously a great opportunity, whether it is in rethinking the design of physical products into software systems, whether it is replacing controls. I mean, if you look at the dashboard of a Mercedes S-Class now, it is entirely digital. There used to be knobs and buttons and needles and all that there that have completely gone away. Even when you look at companies where we are redesigning the stores to become digital experiences with kiosks and touchscreen walls and more intelligent shopping aisles and shopping carts and things like that. So I think that as a growth area is certainly a key area to expand into. And yes, I mean, we have also made an acquisition in this area with Scava, the Kaleidos. They have a great mobile platform. We made 14 sales of that in just the 1 month that we had Scava. So, you know, we are excited about that area, and yes, we will acquire in these kinds of areas as Ritika is sitting right here as we go forward.
Praveen, just want to understand from you in terms of your India business that has seen a marginal decline. What is happening? Are there no government contracts coming by, or you know, even the government is talking about tech, but are there no big contracts that are coming up for you guys?
You know, when you say the word India business, our thinking is that India business would be a good idea. Because if I was to answer the question, I would have said that I completely agree with Mr. Murthy. I'm not going to answer the question, and Praveen will answer the question.
So just a follow-up, sorry, to her question. Yeah, so Mr. Murthy told us, you know, in an interview that Infosys has always lost money in every, you know, government contract in India. And, you know, Vishal, you are almost the brand ambassador for Digital India. So, I mean, what will it take to, you know, look at this business again in a big way? And what steps is the government really taking to repose trust?
I think as I said, if I was to answer the question, I would completely agree with Mr. Murthy. Therefore, I'm not going to answer the question, and Praveen will perhaps answer the question.
Yeah.
Praveen.
No, I think I mean, we have always had a selective strategy on India. So even on government projects, we look at it on a case-by-case basis, and wherever it makes sense, we do bid for it. But we are focusing much more aggressively on the private sector, and this quarter itself we had about 5 wins in the India business unit. As a percentage, it's very small percentage of the business. Government is about 80–85% of India business. So it will take a long time for our India strategy to reflect on the numbers. So that's where we are on the India.
Just to add to Chandra's question, I think that obviously Digital India and Make in India are extremely important initiatives, but these are very early, and we are at Infosys are very committed, and I am personally very committed to ensure that Digital India is an amazing success. The Prime Minister, Minister Ravi Shankar Prasad, clearly believe in Digital India in a very deep way, and frankly, I personally believe that digital is the future of India. Not only India itself becoming embracing digital and virtual technology, but also helping the rest of the world become more digital. So I think that we have to play a leading and pioneering role in this area, and Digital India has to succeed. But having said that, the practices that we see in business today are quite far behind that. And as Mr. Murthy said, this is something that the business climate has to improve in order to reflect that in business. But we have to separate the contribution towards Digital India and Make in India as in the greater good from the business that we do within India itself.
Be correct that in terms of, you know, the time taken to process these contracts, or, you know, deliberation time that was being taken earlier, that has not changed for you guys?
No, I think some of the big problems are in terms of tight, I mean, rigidity on the milestone payment. There is a lot of dependency on because when you bid for an India project, we bid as a system integrator. There is a lot of dependency on other partners and other things happening, and many times it's not in your control. But unlike a private thing where you can, in a private contract, you have a lot more flexibility, you can negotiate, and there's a lot more reasonableness. But here, even though many times it may not be your fault, sometimes you don't get the payment because it's linked to some milestone which is.
That's more from the management of Infosys saying that digital is in every aspect of the work that they do. So technically, you could qualify it as 100% of the revenues as well. And also talking about the deal wins. For the markets, it's rather flat. The Nifty is hovering around that 8,600 mark. But mid-caps are weak and so are the banking stocks. So the bank Nifty is also down nearly 0.5%. I'm Reema Tendulkar. With me is Mangalam Malu. And we're with you for the next 30 minutes to talk about the mid-cap universe. Hi.
Hi Reema, earnings is all that's on our radar right now. In fact, just an important nugget of information. Today, all the earnings that are coming in, Reema, the total market cap of all those companies is 10